Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. My name is Chris Coney and I am the host of the Cryptoverse and also the founder of cryptoversity.com, which is the online school where you set the price to learn about Bitcoin, cryptocurrencies and blockchains. And you can find out more at cryptoversity.com. If you go to the podcast page on Cryptoversity, you can subscribe and have the Cryptoverse fed to you every day on iTunes, Stitcher, Google Play, YouTube, or Steemit. And if you want to support the Cryptoverse and see it continue, please go to Steemit and vote for this episode on the Steemit network, or contribute some Bitcoin directly via the address on that page. Now today's going to be a Bitcoin-oriented episode. As we go over to CoinMarketCap, we see immediately that Bitcoin on the day, 24 hours, is down 8.7%, and there's more to say on that. I've actually got two articles to explain the recent price decline. Yesterday I said I didn't know why the price had dropped 3%. It's now plummeted another 8.7%, and I've since found out why. There is one thing that you might already know, one other thing you might not yet know. So let's just comment on a few other things here to do with CoinMarketCap. We've got the main Ethereum chain is down another 9.24%, and Ethereum Classic is up 3.79%. So the gap between the two is ever closing. Ethereum Core has a market cap of $782 million, and Ethereum Classic has a $230 million market cap. So that's the closest they've ever been. And in terms of trading volume, we have Ethereum Core, $90 million has been traded in the last 24 hours. Ethereum Classic, $128 million has been traded. Absolutely unbelievable. Steam's sitting pretty well today, up 2.5%. There's some quite large dips. Dash has lost 5% near enough today. It was up about 8% yesterday though. The Nem coin, 13% has shaved off the price of that. There's some quite big moves here. And let me go look at my overall market cap figure. You know, yesterday I was saying that I don't like to see the overall market cap decline. Well, we're now under 11 billion. 10.8 billion is the overall market cap of all cryptocurrencies. And that's down from a recent high of 13 billion. So $2.2 billion of value has left the cryptoverse. And I don't like seeing that kind of thing. Okay, but we'll find out why this is. It's explainable. Some other big movers here. Scenarios lost 8%. Monero's lost 8%. Sorry, Scenarios lost 9%. The Digix DAO, the gold-backed digital currency, 17.87% down on the day. Oh my goodness me. Well, a lot of people say, I don't know if I'm buying into this, but a lot of people say that when Bitcoin has a ripple effect across the cryptoverse, maybe. Given that, oh dear me, there's all kinds of things going on here. Given that the drop in the Bitcoin price is specifically related to Bitcoin, I don't see how that would affect other cryptos. You'd think people would flee into the alternative coins. All right, looking at the Bitcoin price chart, I have opted to change the color scheme for my listeners and viewers on YouTube because when I was looking back at the episodes, it was quite hard to see the price chart using the black color scheme. While that is easier for me to look at, easier on the eye, have a black background and then colored candlesticks, it didn't really show up very well on the recording for some reason. So I flipped it over to the white color scheme to see if that's any better. Now, unfortunately, the downward trend line that I drew yesterday as a sort of a speculative is now pretty much confirmed. There were these great big red candles that have appeared. You see, I'm sighing as I'm speaking here. Wow, we've gone right down. We hit a low yesterday of 465, down from 665. So there's nearly a $200 range there, and that's a surprise to me. That's the biggest volatility we've seen in about a month or two. But it just proves that Bitcoin is it hasn't yet grown out of these massive swings. So we'll now explain that. So the first article I've got for you is from Coindesk. It's Charles Boviard. Oh, see, I have trouble pronouncing these people's names. Charles Boviard. Boviard. Anyway, if anyone knows how to pronounce that guy's name, I'd appreciate it. So, courtesy of Coindesk, that's the gentleman. Charles has written it for us. It was published yesterday on the 2nd of August, and the title reads, Bitcoin drops nearly 20% as exchange hack amplifies price decline. So here we go. The price of Bitcoin fell sharply yesterday, exacerbating an already ongoing decline as global market participants reacted to news that one of the largest digital currency exchanges had been hacked. So yes, I did already comment that there was a dip in Bitcoin, which was just a natural dip, I think, and then that was exacerbated by this hack. And this is a new hack. Earlier this afternoon, Hong Kong-based exchange Bitfinex halted trading after discovering a security breach, which included taking its website offline and pausing all withdrawals and deposits. Representatives from the exchange told Coindesk engineers were seeking to uncover issues at press time, although the company had confirmed roughly, wait for it, hold your breath, 120,000 Bitcoin, more than $60 million, was lost or stolen, and they confirmed that via social media. That's a lot of Bitcoin. In response, Bitcoin prices fell to $560 by 7:30 p.m. UTC, down to $530 by 11:30 p.m. and $480 at press time, according to the US dollar price index. This price was roughly 20% lower than the day's opening of $607 and 27% below the high of $658 reached on Saturday the 30th of July, when the digital currency began pushing lower. Arthur Hayes, CEO of Bitcoin exchange trading firm BitMEX, emphasized that this event had a clear and measurable effect on Bitcoin prices. And you can imagine it would, wouldn't you? Anytime like this happens, I'd call them amateur investors, because this sort of stuff doesn't spook me out at all. It just doesn't. Because one exchange getting hacked has very little to do with Bitcoin's fundamental value or its long-term value, which is why when these kind of thing happens, I don't even bat an eyelid, right? I just don't, because I don't hold all my Bitcoin in a single wallet. I don't hold it on exchanges, etc., etc., etc. So this guy, Arthur Hayes, told Coindesk, quote, a high-profile hack is not good for sentiment and curtails the ability for market makers to keep an orderly market, close quote. Well, yes, that's stating the obvious. Market observer and trader Jacob Eliasov provided similar input, telling Coindesk that the event had sparked a new wave of uncertainty. A new wave of uncertainty in what? In the reliability of exchanges? Well, maybe. But this is what surprises me about BitShares, is that this couldn't happen to BitShares, because BitShares has a completely decentralized exchange. So you couldn't. A hack on BitShares would hack the entire network. You couldn't just hack an exchange because there isn't one, as such. So the proviso there is that there are some IOUs on BitShares, but the actual native tokens to the BitShares network, like, for example, I don't really talk about this much, but Cryptoverse has its own currency called brain cells, and they live on the BitShares network, and it's a native token of the BitShares network. And there's no way anyone could steal brain cell tokens from any holders. The only way they could do that is if the individual was careless with their security, and then the person got into their wallet. But then they'd only be able to steal what was in that particular wallet. This is this whole thing about the exchange getting hacked. This is a problem of centralization. That's it. It's not a problem with Bitcoin. It's not a problem with the business models or anything like that. It's purely because there was a centralized place where there were 120,000 Bitcoin sat there, which were obviously owned by many different accounts, and then someone went in and stole it. And that was because all you have to do is compromise the centralized point, and then you get access to everyone's funds. So anyway, so this fellow, Jacob, was telling Coindesk that the event had sparked a new wave of uncertainty. And here's a quote. "The big question will be how much was stolen and whether Bitfinex will make customers whole," he said. Now, making customers whole means are Bitfinex going to compensate all of their customers to make sure they haven't incurred any financial loss as a result? Now, I don't know how profitable Bitfinex is, but they would have to have $60 million of spare cash in order to fill that gap. And even if they could do that, if I was an investor in Bitfinex, I would be like, oh dear. Bitfinex has just basically lost $60 million in profit overnight, and that's not good. I don't know if they could survive that. I don't know how big the company is. Some companies just wouldn't sniff at $60 million. However, the size of the Cryptoverse, I think that would hurt, even for someone like Bitfinex. So market participants traded more than 600,000 Bitcoin via Bitfinex during the 30 days through to the 2nd of August. Bitcoinity data reveals. This figure represented, there's two words, the word represented is listed twice in this article. This figure represented 1.6% of more than 39 million Bitcoin transacted through various exchanges during the same 30-day period. Right, so Bitfinex, according to that, only accounts for 1.6% of all volume. Okay. The halving's impact. However, the price decline does not appear to be the sole result of the issues at Bitfinex. Bitcoin prices experienced a gradual downward movement over the course of several days, with market observers pointing to the halving of rewards on the Bitcoin network as the cause. This event, which saw a 50% reduction in the mining subsidy on the network, generated significant visibility when it took place on the 9th of July. I don't buy that personally. I honestly don't, because if I just flick back to the price chart for a second here, I made several comments on various episodes of the Cryptoverse following the halving, and there wasn't any immediate massive shift in the market. And so, to my mind, after the halving, there was either going to be an immediate large shift or a slower long-term shift, but not sort of, a medium-term sudden shift. It's like, well, you couldn't attribute that to the halving. It was either going to happen immediately or it was going to happen slowly over time. And that's what I was betting on. And that's what I still believe is going to happen. So when we're reading the news, you have to use a bit of discernment in finding the truth, because the truth is what we're after right now, right? So rather than coming to conclusions to say, that's it, it's the halving that's caused it, you instead turn it into a question. Say, could the halving have had an impact on the Bitcoin price, or can this price drop be explained by the Bitcoin halving, right? And I honestly, and again, I can't say this, I can't actually prove this, so it's not, you can't take it as truth, but it's just my belief, my opinion. So take it as that. I don't believe that's the case. So the article goes on. Let's see if it gives us any insight into this. At the time, there was no major change in Bitcoin prices, despite expectations that such a move may have been probable. There you go. And then there's another quote. It says, "It looks like traders got a bit ahead of themselves, thinking that the price would go in a straight line after the halving," said analyst Tur Demister. "The halving is real and will have real effects." Okay, so that's giving me more information. So how could the halving have impacted the price? Well, before any major event like the halving, traders will put trades on either side of the price, meaning they'll look to buy as soon as it starts ticking up, because they want to then sell it for an even higher price when the price takes off. Or they'll put a sell price in just below where the price is. So if there's a sudden spike downwards, they'll begin selling it or short selling it and then buy it back later to earn a profit. So if there was a lot of orders on the books that were not yet triggered, And a lot of those orders were expecting price to go up. Of course, when that didn't happen, there's, I guess you could call it, I've heard it referred to as unwinding, which is where then traders start taking their trades off the table because the market didn't go the way they wanted it. And of course, they can't leave the orders on if they're losing money. So perhaps if there was a lot of traders betting that the price would go up and it didn't, the very fact that they are taking their trades off the table is putting downward price pressure on Bitcoin. Now, again, that's highly speculative. I can't prove that. I'm just doing a thought experiment. And this is the thing. When searching for the truth, it's good to generate a load of possibilities and then delete all the ones that are, impossible, and then, put some evidence in there to qualify the rest of them in order to find one that you can actually verify in the end. Anyway. One such effect is profit taking. Oh, actually, see, I honestly did not read that before I just said that, but this is just going to confirm exactly what I've just said. One such effect is profit taking. Peter, oh my goodness, here's another name I can't pronounce. Zivkovsky. Oh, that's quite easy. Peter Zivkovsky, Director of Operations for full-service Bitcoin trading platform Whale Club, spoke to this development, noting his belief that this trend was in full effect after the halving. Still, he suggested the impact could be limited due to the existing market support. There are still plenty of stubborn longs open, he added. Yeah, stubborn longs, that's like, well, I don't think there is after the massive move over the last 2 days, because a stubborn long is where, you put a buy price in and you trade with trigger and you make money when the price goes up. And the price starts going down, like it has over the last few days. But rather than cutting your losses by just closing the position and taking the loss, if you were stubborn, you'd go, no, I'll leave it on, and I'll continue to lose money because I believe it's going to turn around any second, and that's kind of a stubborn long position. But of course, if it doesn't turn around like it didn't, looking back at the price chart, there are these 3 massive red candles. If you were stubborn about it 2 days ago, you'll have now lost a significant amount of money. And that's why I'm not a big advocate of speculating, because that's gambling. There's a different way of doing it, trading, proper technical trading with a trading system, where you can consistently make money without taking massive risks. It's just whenever every trading course, every book that I've read on trading, they always say the same thing in the opening chapters, which is the markets are ruled by greed and fear. So greed is what will keep people like a stubborn long, for example, and fear is why people sell when the price dips, because everyone's like, oh my God, my Bitcoin is devaluing, I must sell it now before it devalues anymore. And then the wiser among us, who believe in Bitcoin's fundamentals, just sit back and watch it all happen. Yeah, my Bitcoin has declined in value, so what? It'll be back. I'm in no rush to use it. Anyway, the final section in this article says, search for meaning. The drop below $600 may also indicate a change from the bullish sentiment that has so far characterized 2016. Bullish sentiment meaning a tendency for the price to go up. For example, Joe Lee, founder of leveraged derivatives trading platform Magna, stated that Bitcoin's drop below $600 could indicate that the currency's long-term fundamentals are weak. Really? So what is it about Bitcoin's fundamentals that have changed? What are Bitcoin's fundamentals? The code base, I guess. That's what I would say is the fundamentals. So, yeah, it's interesting, isn't it? How much power do Bitcoin developers have over the price? Now, I'm not saying that they would do anything to manipulate the price directly. However, price moves will be a direct consequence of changes they announce, because that fundamentally changes the way Bitcoin network is governed, and traders, investors, and everyone else will take that as gaining or losing confidence in it. So, but I don't think we'll see in the article I'm going to talk to you about in a minute as to why this in the Coindesk article is only, mildly explaining why the price has moved. You'll see the another side to this in a second. So he emphasized that the market observers would be watching Bitcoin's prices to see how much of Bitcoin's steady growth has come from long-term holders. Going forward, market observers also offered predictions on where Bitcoin prices will go next. Now that the digital currency has breached $600, it will test $550. It's low before the Brexit vote, and that's from this guy Hayes. Said Hayes, it says. Now the digital currency has breached $600, it will test $550, which was its low before the Brexit vote. Okay. Tim Enneking, chairman of the cryptocurrency investment manager EAM, interpreted the recent price decline as evidence of post-halving fallback, further stating that Bitcoin will find support above $500. Is that right? Looking at the chart right now, Bitcoin's sitting at $535. Yeah, so that's validated that. Zekovsky told Coindesk that the digital currency's decline below $600 could signal the start of a medium-term bearish trend powered by a strong long squeeze and a lull in Bitcoin interest by the general public. So bearish trend, that's downward price movement. So while these analysts pointed to future weakness in the digital currency and potential declines, Demeester emphasized that not only did he not see any sign why this bull market is over, he expected the price would go a lot higher over the next 12 months. And that's the end of the article. So rather than going into the comments now, I'm going to flip over to an article from an obscure site that I've never heard of, cryptocoinnews.com. And I found out about this courtesy of, and shout out to, Jonathan Bahai of Bunker Chain Labs, who fed this article to me yesterday as a explainer as to why the Bitcoin price was going down. So the article reads, Bitcoin price falls as miners meet Bitcoin core developers. Bitcoin's price dropped by $30 this morning as market uncertainty increases due to a closed-door meeting between Bitcoin miners and Bitcoin core developers. Details are sparse as no media representatives or independent observers have been invited to arguably the most important Bitcoin meeting in almost 8 years. Well, the 8-year history. What is known is that the meeting is attended by 7 Chinese miners, or at least representatives of the mining companies anyway, and 20 Bitcoin Core/Lightning Network developers. No one has been invited from the Bitcoin Unlimited or Bitcoin Classic teams, as far as is known, with Roger Ver, a Bitcoin early adopter and an angel investor, publicly stating, quote, "To be clear, myself, Peter Smith, CEO of Blockchain.info, and I assume just about every other consumer-facing business were not invited. It seems to only be miners and core," close quote. Although the meeting is publicly referred to as a social event, at the top of its agenda is likely to be on-chain scalability, particularly in light of earlier indications that miners may move to a different Bitcoin client on or around August the 1st. There is little, if any, discussion in r/Bitcoin, that's on Reddit, about this meeting. On the other hand, r/BTC seems to be full of anticipation, with numerous threads debating all aspects. Overall, it is likely that the entire community is now focused on the outcome of what may turn out to be a historical meeting for the digital currency. The price drop may suggest that the market expects a continuation of the current status, or it may just be a response to the current uncertainty of outcome as well, perhaps insider trading. That's actually a very good point. So, the people participating in this meeting, they're going to be the only people in the world privy to the discussion. So what you could do is, and this is bad, you could leave the meeting and immediately start placing trades on the Bitcoin markets with knowledge that you just agreed with the miners and the core developers certain actions that were going to be taken, which would be favorable or unfavorable or seen as unfavorable by the market. And then you could forerun that by putting orders in on the markets. And that's insider trading, and that's a real problem. But there's nothing we can do to stop that because it's an open market. And Bitcoin's not a company exactly, so it's not like anyone owns it. So insider trading typically is where if I work for Microsoft and I am head of research, and we just invent some new fangled quantum computing technology or something, then I know that's going to cause Microsoft stock to go up. So I start buying Microsoft stock the same day we make the discovery. And then, of course, months later, when we announce the new products, the price rockets and I make a ton of money. That's insider trading. That's illegal, right? Because I had inside information that wasn't fairly known by the public. So the same thing could happen with Bitcoin. People who are closest to the Bitcoin core development team, the core development team themselves, the miners, and this secret meeting is a bit dodgy, in my opinion, especially since Bitcoin's about transparency, right? And they've got absolutely no transparency. If they live stream the meeting or something, maybe that would have been fine, but or if they release the transcript of the meeting, maybe that would go some way to allay people's fears. But anyway, it says officially no announcement is to be made, and the social gathering will not result in any decision. However, it is likely that by tomorrow miners will make a conclusive decision on whether to continue without on-chain scaling or move to another client. An announcement, therefore, whether formal or informal, is to be expected. What this is talking about is whether miners will say, right, screw this. We've had enough of this debate over the Bitcoin block size. We're just going to switch to an alternative client like Bitcoin Unlimited or Bitcoin Classic, which automatically supports larger block sizes, right? Excuse me. So the mood on r/BTC seems to be that tomorrow is the day when they conclusively decide on on how to move forward and end this 1.5 year long debate. Two options are suggested by various individuals in a grassroots manner. One option is to switch to Ethereum, which has an impeccable development team, really, and has announced plans for unlimited scalability. Ethereum's community, however, has a very different culture and philosophy, seeing the project more as a technology in its early stages, rather than ideology with rigid rules or principles. Numerous individuals are therefore suggesting a second option, a proof-of-work hard fork, first suggested by Luke Jr., a Bitcoin core developer and blockstream contractor. Anyone can hard fork any public blockchain without requiring any permission. Care will need to be taken in regards to any relay attacks, and there is likely to be a high short-term volatility as the market decides which chain they support most. But both chains can continue in their parallel universe. So what we don't want is a splitting of Bitcoin like we have in Ethereum. Well, I say we don't want it. Hey, screw it. It's the free market. We can do what we want. Although a Bitcoin proof-of-work hard fork is likely to start with few highly experienced developers, if all three development teams of Bitcoin Classic, Bitcoin XT, and Bitcoin Unlimited combine, there will be around 10 or so developers, with many others likely to join, depending on the market price response. Whichever option anyone chooses, either is better than none, in my view. And that's the view of the author of this article. This debate has now continued for more than 1.5 years, taking up time and resources, hampering progress. It's time to make a decision, end this constant attacking of our own people, and move on to attracting new participants, new businesses, new VC capital, and towards building things. That's it. So there we go. The biggest contributor to the price drop is no doubt the hack. However, it's coincided with this secret meeting this closed door meeting between the miners and the Bitcoin core developers. It very much depends on how they report on this. If they do release meeting minutes or whatever, and even if they release an official statement, what's going to be suspicious is, how do we know, we as the Bitcoin community, how are we going to know whether certain things were said that they didn't reveal? So they've made some agreements that they don't include in the announcement, and only they know about it. So you know what I'm saying? This is why meeting in secret without media representatives or anything like that kind of lack of transparency is like, it's not cool, is it? Not in a community like the Bitcoin community, which values transparency so much. Anyway, that's going to do it for today's edition of the Cryptoverse with me, Chris Coney. I'd like to thank you for listening today. Please go subscribe to the Cryptoverse by going to cryptoversity.com/podcast. Subscribe on your favorite network. And also please vote for this episode on Steemit so that you can help us support the Cryptoverse financially. Remember to check out the main site, cryptoversity.com, which is the online school where you set the price to learn about Bitcoin, cryptocurrencies, and blockchains. My name is Chris Coney. I've been the host of the Cryptoverse, and until the next episode, guys, it's bye for now.